It is imperative that the US federal government come to an agreement and a consensus to increase its national debt ceiling, because failure to do this will bring into question the creditworthiness of the United States federal government. Not only that, the effects it will have around the world in terms of financial and economics would be devastating. This would be heard around the world. This means that we will be facing a constitutional and economic catastrophe if the federal government does not come to an agreement in the next few weeks. What would happen if the US government does not come to a consensus? What type of ways would there be? What options are available to have a technical default or a regular default? Or what are the possibilities that may ensue from here? This would be devastating for the US dollar, because this might even give the chance for China and their yuan and their relationship with the BRICS nation, especially Russia, the chance to stand up taller. Now, if the BRICS nation were to stand up on this opportunity and we have Iran and Saudi Arabia on their backs, this is not a good look to have in general as the world standard currency that the US dollar holds today. So the US government must protect this beautiful privilege, this exorbitant privilege that we have to be the US dollar hegemony, international standard of trading currencies today, and we will fight and preserve that right. And the US government knows this, the Treasury Department knows this, the Federal Reserve Bank knows this, and the whole world knows this as well. If there is any hesitation in terms of there actually being a default, the repercussions would be echoing for decades across time. If we do not curtail this event from happening, this will affect the stock market. The stock market will plunge. I guarantee you that situation. I also guarantee you the bond market won't be safe. The bond market will take also a massive hit as well, because the credit worthiness of the United States, the one that all these companies register to, their central registration system, if they have no longer the credit worthiness, then everything of its subsidiaries would also collapse. And this would all accumulate in the fact that the Federal Reserve would have no choice but to raise interest rates to levels we have never seen before. And in turn, to fight inflation, their standard, we would see the unemployment rate in our society skyrocket to levels that will just break ceilings and be an open discovery on the charts. Imagine unemployment rate at 30%. It's ridiculous. I know. I'm sorry. I didn't want to say that. But it might be even worse than that if this happens. Now, the US dollar's credibility is very strong today. In fact, the US Treasury bills are considered around the world and the country's governments to be very risk-free. What would happen if something like this would come into question? Well, the government would most likely take a public holiday and just be like, hey, we're backing off, we're shutting down our offices, we're familiar with this. And, things might affect into society, such as, Social Security and Medicaid may not be paid for that cycle. Government parks and the border, staff members would not be able to go there and work. TSA in the airport might definitely be affected, so airplanes can't land. There will be repercussions across the economy that will be heard around the world, but nothing that we haven't done before in the past. So ultimately, the US government, passes these bills, whether to increase the debt ceiling or not. We pass these budgets, whether or not there's, tax cuts in there that are considered temporary, that become permanent, or whether there's incentives in there that are temporary, that eventually become permanent. What's the point of coming up with a budget if people will flip-flop on it? Right? I understand, one party passes it through and the other party may not have a say. So later on, they can say, hey, now we have a say and we're going to reverse a lot of the things that you put in that bill that you pushed down our throats. But now that we have some leggings to stand on, we will definitely help you get rid of those things to pass this budget. And that's what we see today. Ultimately, if the US government really means not to increase the amount of debt that is out there and they're actually trying to help the economy, then let's just ask them to stop swiping. They keep swiping their, federal government credit cards and the debt keeps piling on one another. Let's just say, hey, guys, listen, Basil has a video about the credit card crisis that's, around the corner just because of this particular habit precisely. Let's stop swiping the federal government's credit card and actually pay down a lot of this debt. Because if you do reduce your debt, what would happen? You become a little bit more logical about your spending and you won't be crying about, the debt ceiling and, we need to increase our credit card limit by this much and the banker's saying no. It's the right to say no to the bank if your credit worthiness is shakiness. If you have history of defaulting, are you going to fault the bank for your behavior? I understand that spending is easy and it also gets votes. That's why during the pandemic, what happened, we saw the Republicans and the Democrats come to an agreement for spending and helping the unemployed. I understand this requires logic, to follow a budget and actually follow through on it and being a little bit more fiscal responsibility. That's why we see the Speaker of the House, Kevin McCarthy, the Republican, meet up with Joe Biden in the last few times, and they will eventually come up with a plan, right? It's a game of chicken, essentially, that Bill, he doesn't want to reduce spending, and Kevin McCarthy's like, you got to reduce spending because we're actually giving you $1.5 trillion. And they're like, no, I don't want to reduce spending. Give me 1.7. They're playing a game of chicken. We know eventually what will happen is that the Democrats will have to concede because they don't want their administration be the villains across history, especially Joe Biden, right? That they're the ones who made the US government default. There will be a meeting of minds eventually agreed upon, and if nothing can happen, the Congress will eventually do their thing. And when I say that, I mean since 1916, right? No, or is it 17? 1917, in the middle of World War I, Congress has increased the national debt ceiling 78 times. That's right. 78 times did the federal government step in to increase the national debt ceiling. What makes you think we're going to skip a beat today? Now, I understand there's so many Republicans out there, more than almost 50%, that actually don't want to increase the national debt ceiling. They don't want to spend more. They actually want to cut back on spending because it's so frivolous and it's not solving the underlying problem. I hear them. And I understand that so many Americans are also saying, hey, we need to spend more because so many of us are unemployed. Some of us are having the hardest time in our lives making ends meet. And that's why the Democrats have such a loud voice. So because it's between a rock and a hard place, it's an unbelievable path to be in. So here are the 10 options that are coming ahead that we have to consider as a country. So debt number 1 would be to declare the debt incompatible with today's spending laws. This would invoke a rule called later in time rule, which basically says since 1917, when the first national debt ceiling was raised and we started as a government and a country started spending on our credit cards, right? That is the debt that we have to pay. And the national debt back and before 1917 can be ignored. Option number 2 is the government may be able to buy back bonds at a discount with the cash we have today. This would open up some available credit, and what we would do is we basically issue new bonds at a higher rate, and that higher rate would still come back in our rear end and bite us, you know what I mean? So it's technically not the smartest move to do, or it takes some magical accounting tricks that we have up our sleeve, just like every other accounting trick we've tried to use. Essentially, I'm worried about number 1 and 2 being held up in courts and it won't be passed. So option number 3 would be getting an advance from the Federal Reserve, from the Fed, and this would just be issued to us as debt, and that won't bypass the debt ceiling. So that's a terrible idea. I didn't say they were all good, but these are options they have, right? So they probably won't ask to get an advance from the Fed, but that is something they can exercise. Option number 4 would be the issuing of $1 trillion coin, right? The Treasury would be able to issue $1 trillion coin because of a 1997 Novelty Coin Act that they had, where they can issue novelty coins. Now, if the Treasury does move forward and have $1 trillion coin and go to the Reserve and say, hey, because they're usually borrowers from the Federal Reserve. The Federal Reserve are the ones that make up the money, right? Like a crypto boy, they just make money out of thin air, and then the Treasury goes and borrows against it, right? So now if the Treasury can say, hey, here's $1 trillion coin that you didn't issue, that we issued, and goes to the Federal Reserve and says, hey, give us, for $250 billion, a quarter of, for issuing bills or compensations for this $1 trillion bill, and they say, I'm looking at this coin. No, we're not going to do that. We're not going to have anyone else issue US dollar. Right? Imagine you take a napkin, you put a $100 Basel issued currency, and you go to the bank and say, give me, 5 $20 Basel issued currency. They're going to look at you like you're weird, and they can definitely say no to you. Obviously, they'll say no to you. The Federal Reserve will definitely say no to the Treasury as well. And they actually already alluded to that as well. So they're not going to do it. And most likely the markets are not going to even love this in general, because historically there's a precedent where the Federal Reserve are the only ones that conjure money out of thin air. The Treasury borrows that, right? It doesn't make money, it borrows that. So now if there's this new entity that's actually creating money, that's going to shake up the world's trust in it, because they're like, oh, Now there's two issuers of money, and the system that we've all been used to is completely changed. That's going to shake up the markets, and the markets, trust me, are not going to like that. Option number 4 would be the 14th Amendment, which says something to the effect of the validity of the public debt authorized by law shall not be questioned. That, in conjunction with our first option, the 1917 rule, when the national debt was first increased, with those two, it would basically be able to say, hey, this will not be questioned and the public debt is valid because we're authorizing it by law. And that's something that people have asked Joe Biden whether or not he has considered that. He hasn't said he has considered that, but a lot of people are just wondering in general what's going on with his mind at all. Option number 5 is called the discharge petition. A discharge petition is when, actually it happened twice in history, in 2015 and 2002. This is where the Democrats basically forced a vote to increase the debt ceiling. But with today, the way things are standing, they would ask 5 Republicans to also join on this bill to pass it through. Now, this would be political suicide for those 5 Republicans, but 3 benefits would come from this. 1, America would be saved. Number 2 would be the Biden and the Democrats would definitely positively be affected by this. And number 3, McCarthy can say, hey, it wasn't me that faltered. It was these 5 Republicans that switched sides. Now, I don't think this will happen because remember I was saying that the Republicans actually don't want to increase the national debt. There's 55% of Republicans that don't want to increase the debt. They just want to reduce the spending. But in order to reduce the spending, and when you pass bills, you have to do it during that time, not after you use the facilities and already, had the charges accumulate, and now you're saying that you don't want to pay the bill when the Pied Piper pipes. If you're gonna play the song, you have to pay the piper. And option number 6 is extending the discussion. Now, the extension of the discussion can happen to the end of the federal government's fiscal year, being September 30th, or the Gregorian calendar, December 31st. This has happened many times in our history, as we know, where the extension for the discussion to raise the debt ceiling has took place. This isn't a favorable option because we don't have enough cash, or the Treasury doesn't have enough cash, as Janet Yellen alluded to support us that long stretched out. But that is an option that they do have. Option number 7 is they pass and extend that ceiling. This is something everyone wants. It's lucky number 7. This is what they want. We want to come to a consensus with the right and the left, and they say, okay, we're going to increase the debt ceiling by $1.5 trillion, and the spending will be cut, and everything is rosy again for the country. Option number 8. Being the government shuts down. Now, if the government shuts down, as I alluded to before, the TSA, the park rangers, the border, federal agents would basically be taking a holiday, and this would prevent and lower the amount of money the Treasury has to spend. Option number 9 is that the US government actually just suspends the debt ceiling. Option number 10 is the worst of the worst. It's the actual default of the United States of America. This would be terrible. This would be cataclysmic. This would be turmoil and crisis does not even cover it. If that were to happen, I'm just going to say, I know I'm going to be accumulating a lot of gold, like the way these central bankers around the world have been accumulating a lot of gold. I'm going to already add to my stacks. I'm not your personal financial advisor, even though I am a licensed financial advisor. This is not financial advice for you, but consider looking into gold. Now, certainly none of these 10 options are really great, except number 7 is the one that is most feasible and the most cooperative and responsible, I guess, out of all of them. But we don't want to gamble on people's lives and their enjoyment of the liberties that we have here in the United States. And we want to make sure we save face and our credibility is still top tier around the world. Now, a lot of people don't know this, or maybe you do know this, that Janet Yellen and the Treasury are actually out of fund. Everything's already been allocated. We already hit that debt ceiling. So the ticking time crisis is coming up, and it's coming up very fast. There are some sort of special case reserves that the Treasury does have access to, like in 1934, I believe it was called the Exchange Stabilization Act, where the federal government basically issued in 1934, after the creation of the Federal Reserve in 1933, the year before that, where they said, give us your gold and we'll give you $20. And then later on, they revalued it for $35 for that same gold, right? So they have created and accumulated about $100 billion in this fund. Now, it is an emergency fund. You don't need congressional oversight to use this fund. We also see the Exchange Stabilization Act not only bail out SBV, but it also bailed out some political donors and actually politicians as well. The problem is, cumulatively speaking, this fund will be, broke soon. The incentives and the collections from taxes won't be enough or sufficient to keep the government operating. Now, I know a lot of us are like, hey, Basil, listen, this is just all political theater. These are all just, meandering, making the debt crisis look so bad and all of this. And eventually they're going to come into the rescue because they want to be taken serious. And they're going to like, oh, we saved the economy. But, we're looking at JP Morgan right now, right? And JP Morgan is basically convening a war room 3 times a day to basically assess the national debt, this debt ceiling, what would happen if the government shuts down and they can't pay for social securities and they have to cut back on all these expenses. The 10 reasons that we've covered, right? They're actually convening and meeting with people just in case a default is a real option. And this has never happened before, where the big banks are actually preparing and thinking of a way to ensure themselves continuity during the crisis that may take place. Now, if this does take place, what happens to the credibility of the United States? It drops, right? It goes from, a AA plus rating. It got dropped from Moody's back during the 2008 crisis from AAA to AA. And if that drops again, guess what happens? The borrowing rate actually goes up. It gets more expensive for the US government to borrow debt, right, from the Federal Reserve. As somebody's credibility gets worse, they pay a little bit more to borrow, and that might actually happen. Now, if they do have a down rating in their credibility, the first market that will definitely see a reflex and is actually the bond market, because the credibility and trustworthiness has been diminished, even though it's slightly. What will happen is the bond market will take a huge effect and interest rates will adjust, meaning the bond prices will drop. And this it'll send shockwaves around the world because everyone's holding those bonds. So even though the public might say, hey, this is just posturing, it's all charades and it's all puppeteering, JP Morgan is very much taking this into account as if it's a real threat and credibility to the state of affairs the way they are today. All right. But eventually, if this debt ceiling does get kicked up, and it does pass, and then a couple days later, everything's good and, the stock market rallies. What happens a few years later? The debt ceiling crisis comes again, the posturing begins, and the cycle goes all over again. It is inevitable that one day they will default. And that same day that comes, I know I'm going to be happy that I have gold. Because if I didn't have gold and the market is in huge turmoil, right, I don't really know what to do, right? I want gold. I want a little bit of silver, maybe some equities that are, internationally exposed, that have diversified their options, that are generating cash flow, right? I will want real estate, definitely about real estate. You gotta have real estate that will hold its value. And not only that, I'll probably want some ammo. I want to make sure that I'm licensed and registered depending on your local rules in your state or your province, but make sure you're registered and you have something, right? Go to the shooting range, have some fun. Great date place, or hang out with the boys, you know what I mean? But you also want to be prepared, licensed, and follow the rules, but you would want some ammo. Now, I understand that, hey, I might be, hyperbolic with my explanation, but I want to remind people that the debt to GDP ratio of the United States is 120%. It's never been this high. We're basically in war times without a war. That, in 1945, after the Second World War, our debt to GDP ratio had to skyrocket. They had to be spending to win the war. But then, it came back down. We don't have a war. We're not with, there's no World War. Well, there is a World War III. It's just electronic, right? It's all the unseen. Read about quiet weapons and a silent war. That'll explain what World War III is. World War IV would be kinetic for sure, right? With what's going on potentially, God forbid. What I'm saying is debt to GDP ratio right now is very high. It's at the rates it was when there's a war, when we're in war, and we're not in war. So it's looking very worrisome, right? You just want to make sure you hedge just in case, your faith is misplaced, but you're still a patriot. There was a time when the United States took 193 years to accumulate $1 trillion worth of debt. Now it's 6 months. When governments have the option of a default or printing money, historically speaking, empires and countries always print money. I'm just saying, you want to make sure that if there's hyperinflation in the far future, that you have allocated accordingly and you had the precognition, the foresight, whatever you want to call it, whether you're right or left, Republican or Democrat, that you and your family are protected. If the US empire were to change, we have to look at past empires and countries and see where they went wrong, right? Today, we can look at Japan, for example, right? There's two economists, Ken Rogoff and Carmen Reinhardt, who did a long-term study, 800-year study, where they looked at the rise and fall of countries and empires, right? And they looked at their GDP to debt ratio. And they came to the consensus, and the market agrees, that 90% debt to GDP ratio is the danger zone, right? This basically means for every $1 you spend, right, only 110 might return to you, which isn't good, because it actually starts dragging on your economy and actually does more harm than good. And this is just exacerbated into a worse situation when the interest rates are high, like we're at right now, the steepest increases in Federal Reserve history. So if we were to look back at what happened to Japan when they had this situation, they basically consolidated downwards, right? There was called a lost decade for Japan's economy, and we do not want that to happen here in the States either. Now, I understand if you do the math, it's inevitable, right? Eventually there will be this sovereign debt crisis that we'll have to experience. So I want to reiterate what I was saying, that we have to protect ourselves. And that's why if you prepare yourself, you're not going to be the only one. Everyone knows this. Countries and their governments know about this sovereign debt crisis that will eventually come into play. That's why we're seeing the rise of the BRICS nation and other countries, whether it's the East or the Middle East or other parts of the world, that are actually working together because they're sort of leaving the sovereign debt crisis that we're experiencing at a debt of 120 alone, and they just want to be a little bit more removed from that and have less exposure so it doesn't fall out into their economy. If you don't believe me, just look at what happened to the petrodollar. It's still here, it's weaker than ever, right? With Saudi Arabia now having been one of the greatest allies of the US, now has slowly faded away, and it is okay now for them to sell their petrol, their oil to China and their, yuan. What happens if there's a petro yuan standard now and not a petrodollar? This will be a huge Achilles heel vulnerability for our economy. There's a saying around the world that says there'll be times where in decades nothing will happen, and then there'll be days where decades happen. During the courtship of this whole global supremacy musical chairs, I think there will be days where decades happen, and it'll happen fast, and it'll be painful if you don't prepare. The reason I'm bringing up the debt to GDP ratio at 120 for the United States is because that's such an exorbitant amount, and we have to pay that interest just to keep the credibility going, even though historically we see economists say that is the descent of the empire. It's about to just go down. The interest that the US, our government, has to pay is equal to the amount of money we spend on defense. That's right, the War Department and the executive branch, right? We have the largest number of defense spending out of all the countries on the planet. In fact, if you take what we spend on the military compared to the top 10 countries, the next 9, right? And you add all their military spending together compared to our defense military spending, doesn't even come close. If you take China's, Japan, Saudi Arabia's, Brazil, India, Germany, South Korea, UK, you name it. You put all their military spending together, all those countries, it doesn't even come close to the US. The US is by far the greatest military expended, military on earth in terms of cost. And our interest on that debt is 1-to-1. That is a lot of debt. That is a lot of debt when you're not making a lot of money. And that's why it's such a gloomy outlook, because right now we just experienced the Federal Reserve increase, 10 consecutive times the interest rate. And if we default, that interest rate credibility is going up. So it's going to be even more expensive to borrow. Oh, yeah, not looking good. So the way things look today, with the Treasury accounts, only having 185 billion as of recording, that basically means the rate that we're burning through cash will buy us 2 weeks left. 14 days. By the time June 1st comes, Janet Yellen, I think her estimates were actually pretty good. In the beginning, I thought she was a little bit more pessimistic, but it's very realistic. In fact, the Treasury today, the federal government actually is already in deficit. The government is already in deficit by 2.2 trillion. On a daily basis, we're burning about $30 billion. And the revenue from recent tax collection was only 2.2 billion, not 30. So we're spending a lot more than we've received. Any child can figure out this is not sustainable. Since the 1980, the government national ceiling debt was 1.2 trillion. Today it's 31.4 trillion. The last 40 years, we've increased it by 30 trillion, give or take. And we want to increase it again by 1.5 trillion, bringing the national debt ceiling to 33 trillion. It's very unsustainable. So that's why we have to make sure that you are protected by investing in yourself and making sure that you have plan in place that I'll get into even more later on, that we are protected. Because right now the GDP ratio is at 1.1 for the US. We're in positive territory. What if the Federal Reserve Jerome Powell was right and that we might have a mild recession? That means for 6 months, 2 quarters back to back, there's going to be a negative GDP. If the US government is obligated to pay on service its debts, even if the debt ceiling is increased and we enter a recession, it's going to be terrible. It's going to be awful. And that's the printed money. That's not including the unprinted money for Social Securities, things that we've committed to. Entitlements and securities still have to be paid. Right now, we might have a national debt that's close to 32,000, but unpaid and uncreated debt is still that, we still owe for Medicaid, Medicare, Social Security debt, veterans, all of this stuff, right? It still hasn't been printed yet. That debt is up to $200 trillion. $200 trillion is unfulfilled. That has already been allocated and promised because of entitlements, because of Social Security, because of Medicaid, veterans there's so many things that people have paid into that the government went into that cookie jar, said, I will pay you back one day, but I'm going to take that and invest it over here. And with that return, hopefully I get paid and I'll be able to give you back what we took from you. And that investment didn't go through well. It actually did very terribly. Now, you carry the IOU, the government spent your money, didn't get an investment back. And what are you going to do? They dipped into the pensions. They've dipped into Social Security. They've dipped into entitlements that have already been paid by us, the people. There's still that can down the road too. And the way the government is probably going to spend this is they're going to cut back on entitlements, cut back on securities, and this will upset all of us so much. What do you mean you're cutting back? We've already paid you. They're going to cut back on us. Not only that, the government's probably definitely going to be increasing our taxes. Joe Biden has already planned to increase the taxes of the everyday people by $15,000 a year. Yeah, Janet Yellen was asked in Congress whether there'll be a huge, whether I think it's $4.7 trillion in taxes that will be generated. Look into that. Crazy. Over $15,000 per US citizen because of the management that they're doing. Because we're sending countries, programs and billions of dollars to help, their social society about learning about LGBT rights. Meanwhile, our veterans, our teachers, pensions, everything else is being dipped into. So these countries can, accept that stuff. Fine, accept it, but why are you dipping into our stuff? We need to retire. You're taking away from our retirement. If we were to look at the markets and see what they're basically showing us in terms of, will the US default on its debt? There's a movie called The Big Short with Christian Bale and whatnot, where, some guys were saying that, hey, because of mortgage-backed securities, people won't be able to cover their mortgage. There'll be a huge financial crisis due to that event. So they have something called CDSs, right? Credit default swaps. Credit default swaps is basically saying that for the economy today, that it's going to happen. Credit default swaps for the US federal government defaulting is at an all-time high right now. And those are the guys that actually know what they're doing, right? Below the stock market is the bond market. They're a little bit more savvier. Below that is the CDS, the credit default swaps. That's the backbone of true betting. It's like, when people do polls for who's going to win in this candidacy and whatnot, then you have the polls on your, your traditional news networks. Those don't mean much, man. Those are all rigged. We know that. Where the real where you can really see the results? In the betting markets, people are putting up their money. They're letting their cash do the talking. And those are detailed and those are very accurate. Those will tell you who will win the polls, right? Not the news anchors and stuff like that. Not the people that are all paid off. They're the actual people, the day-to-day people that are betting on their polls. They come through. Same thing with the CDS. They're actually saying the government may default. Right? And if that does follow through, I want to make sure that you're protected. And how do you save yourself if that were to go down? I understand there's a lot of fear, whether it's from me or other YouTubers or other economists or JP Morgan, that are saying we need to get this done. We need to get this bill passed and to increase our debt ceiling. And in the history of the U.S., it's never had a hard default. Yes, they defaulted in 1933 when when they restructured with the Federal Reserve and the Treasury whole thing situation there. Yes, that was technically a default, but that was different. I know, yes, technically in 1861, the coup d'etat from the government has taken over during the Reconstruction era for the next 10 years from 61 to 1871 took place, and that sort of created the whole other economy, right? It took us from the Constitution for the United States of America from a foundation to 1871 being the Constitution of the United States, right? And then, after the Federal Reserve Act in 1933, that changed that Constitution for the second time, there's 3 in total, to the United States Constitution. Now that's what everyone has, the United States Constitution. What do you mean there's 3 constitutions? The Constitution of and Constitution for. Well, I'm not going to get into that history, but that's true. Look into it. Anyway, so yeah, there were technically defaults out there, but they're not like defaults today. Defaults today, in the last couple of years, we've had we had Russia, we've had Argentina, we've had Germany, we've had Lebanon, we've had Greece, we've had Venezuela. Those 6 countries have defaulted. But the US won't have this default, right? Even if there's a technical default, a soft default as they call it, right? Where they might extend it by 1 day or to the end of the fiscal year or the end of the Gregorian year. That's okay, that's recoverable. It's not like a hard default that those countries have done. Listen, I understand Argentina and Greece are like smaller countries, right? They're like third world countries compared to the United States. So the United States will definitely not default, even by 1 day. It should not, technically should not, right? Why? Maybe because I'm a little bit more, I have more faith in, all this posturing, just like a lot of you, and we will pass the bill. Right? What would happen between Russia and Ukraine if an alien invasion starts happening? They're going to stop squabbling and they're going to have a common target enemy, right? It supersedes your current squabbles. That's essentially the debt ceiling between the Republicans and the Democrats. The Democrats are going to understand, hey, this thing's getting more imminent. We got to get our act together. And the Republicans are like, okay, we've got our act together. Let's get this done. Let's reduce our spending responsibly because we're all adults. And, we've given you a huge allocation. You asked for 1.7. We gave you 1.5. We'll do this. And then, everyone around the world that's holding the U.S. treasuries, they're not holding Argentinian treasuries. They're not holding Greece treasuries. They're holding U.S. treasuries. It's the macro economy of the planet. They're going to say, okay, now they came to a resolution. The debt ceiling was increased. Business as usual. And that's what we want. So if JP Morgan is right and there is a credit crisis that will maybe not come on today, but maybe the debt ceiling eventually will be a problem later down in the future, and the US defaults like Argentina, like Russia, like Greece, like all these guys, right? What would happen? What assets can you hold to protect yourself? Number 1 is gold. We see this happen with central banks. They're accumulating gold debt right now is a pretty good all-time high, right? If it retraces, make sure you accumulate a little bit. Bullions would be good, little coins. That way it's easier to transfer. You also pay the premium to have it in your hand, but that's better than the stock version of gold. You want to make sure you have it in your hand. That and even smaller quantities of silver for day-to-day transactions. That's number 1, precious metals, especially gold. Number 2, you want real estate. You want your home. You want to make sure you have a place, because that throughout history has also helped with hyperinflation because it's more stable. You'll be able to have a place to live. You want a method also to have a garden. You want to have, start looking into that and how to grow plants. Or you can have a vertical tower that does hydroponics or aeroponics. That'll also help you if you're in an apartment or in a condo to grow your own food, right? Option number 3 is you want bullets. Now make sure to follow your state provincial laws. That way you are in compliance and you have your license if you're licensed in your area, but you want access to ammo, you want access to where you put your ammo in as well, right? So that's number 3 on top of the gold, the property, and protection as well. Number 4 for me would be Bitcoin. Bitcoin, I'm able to have my private keys, nobody else can seize it or anything like that, and I can cross borders with my wealth wherever I am. That is huge. That gives me flexibility in taking property outside of my soil, outside of my country, outside of my borders. That is pivotal. And actually, number 5, believe it or not, this might be controversial, you'll actually want US dollars. You might say, Basil, we're talking about the collapse of the empire. What are you talking about? You want US dollars. Well, listen, the world, like I said, has treasury bills. When they flood the market, the US treasury, right, the federal banks will have to purchase those treasuries and give them cash. There'll be a huge liquidity crisis. You want to make sure you have cash as well to take advantage of this market. So that's my top 5 things I would do if this does take a turn for the worse. 1, gold. 2, real estate, right? Property. 3, bullets and things to put the bullets in. Number 4, specifically Bitcoin. Not so much cryptocurrencies for me, it's Bitcoin, right? And number 5 would be US dollar. Let me know down below if you agree or if you differ. Let me know where you stand. Are you with the Republicans? Are you with the Democrats? Are you with JP Morgan? Having your own convening your own meetings and your own version of your war rooms. Try to put things together in your community to put a garden together or whatever you're trying to do to tackle the potential default of the future. If you like, make sure to hit that like button. Thank you for watching till the end. Subscribe if you had not. You've reached the Financial Almanac. I'll see you guys tomorrow.